Hello, welcome to Pension 10 with me, David Brooks, and my colleague Andy Knight-Stevens. This week, we take a look at the fund performance of the Master Trust and GPP sector and have a little think about what those numbers mean and what they might mean for VFM. And then, of course, breathe a sigh of, not relief, but maybe a sigh of exasperation. We're going to have to talk about the pensions bill and Ping-Pong. Okay, Andy. First up, we're going to take a look at Corporate Advisor. And they've issued a trail to their annual report into Master Trust and GPP defaults by publishing a table or a chart that shows the fund performance over the last 10 years of around 20 GPP and Master Trust default funds. And as you'd imagine, there's quite a range of performers. I'll let you go into the details, I think, in a minute. But for me, when I see these kind of charts, I start thinking about, well, that's very interesting, but what is going on under the bonnet? What are the objectives of these funds? What type of members are in there? And I know a bit about pensions, but I don't know a lot about investments and how these things are sort of constructed. I'm glad you're here to help. But what do you think? How do you feel when you're looking at these things? And are we comparing apples and apples, or are we comparing apples and oranges?
Yeah, it's always very difficult, isn't it? Because an orange, it's got different ingredients or flavour to another fruit, hasn't it? So let's try and unpick this. Look, yeah, so there's loads of different figures, different performance. The problem is, as you said, yeah, different funds, including different asset classes, and maybe changing over the reporting period or where the data's from different allocations. So it's very, very, very hard to be consistent and make a comparison. That's the main thing. And then this comes ahead of the kind of VFM value for money framework and that work coming in to enable people to make informed decisions comparing the two. I mean, on the face of it, when we think to where this is going with the VFM framework, you'll just, a person on the street would just look at the top performing fund here and strategy and say, well, we'll just go into that. Why would it go into the fund that's performing over 100% less? That's obvious. But yeah, as you said, the objectives are different. The risk underlying the return could have been different. And equally, other things like this, you just get all these acronyms, TDF, SP, MAF, SMA. What's the average person going to think about this? I just don't know. And then is it net of fees and other things? So it's really hard to be consistent with what you're showing. But I get it. Some attempt to standardize performance and enable the comparison is going to aid people, but it's just really difficult. So it's very easy for me to sit here and criticize doing it. It's just really difficult. But that brings us on to the VFM framework, and Guy Opperman has been speaking about this in the last week. He's called the framework, which is in the Pension Schemes Bill, utterly unworkable in its current form. So it's quite strong language. And he's urged policymakers to actually scrap it and start again. So, yeah, this just speaks to the challenges in it. Everyone's going to have different views, some dissenting, some for it. And I think the industry will just have to coalesce around something that helps members make those informed decisions, no matter how hard it is.
Yeah, no, it's incredibly difficult. I mean, I don't know how the VFM framework would work with these numbers, with these performance charts. Would some of these be green? Would some of them be dark green? Would some of them be amber? Would some of them be red? But then how are you actually, like you say, how you actually do that and how you actually get under the bonnet and look at the makeup of these schemes? It could be down to some membership types. If you've got particularly older arrangement, the members are going to be a bit older and more likely to be in, there's sort of some kind of lifestyling into a lower risk asset. So I just find this,
Right.
And Guy's comments, you just start thinking, yeah, I mean, this is incredibly, incredibly difficult. And if you're looking at an employer, it's basically the employer has the power to which master trust to go into or not. Will members be upset by this if they see this? And I think we're quite, lucky and unlucky. And this is Corporate Advisor's paper, and I haven't read the whole report. I don't think it's come out yet. So I don't know, how they would frame this. But this stuff doesn't really go out into not as far as I've seen, into national press and public discourse. And that's probably for good reason, because it probably isn't very easy to digest and understand it for the layperson. But when we have the VFM framework and we have colours being allocated to providers, I'm pretty sure that will get into the national press. And how people feel. Oh, my employer's put me in X, and they're at the bottom of the list, or they're midway down, or under the average, or whatever metric that person feels is strong enough. They might not be very happy, but they might have been an absolutely sound choice. I just don't understand.
Yeah, no, I agree with that. And then there's, this, it will be past returns as well. It doesn't speak to the future returns, and then might get people who are upset because certain strategies and funds will be structured to behave differently in downside and upside. So you can have unintended consequences of shifting and moving from that as well. So it's hard. I think the idea behind it is good, though, and we'll see how it develops. Okay, Dave, so the pensions bill, where are we up to with that again? I do know, I'm just asking for the sake of this, aren't I?
No, we have to, really. Yeah. I mean, who knows? By the time this goes out, who knows? So we're recording this on Monday afternoon for full disclosure. So when this goes on Tuesday, or you get this in your inbox on Wednesday via the emails, it could all be over. It could all be over. But I suspect it won't be for those who listen on Tuesday. It might be for those on Wednesday. So basically, Parliament will be prorogued at some point this week. I think it's Wednesday. So we need to either finish the argument, or quickly come to the argument in a second, or this bill will need to be rolled over into the next session, because we're having a King's Speech coming up. Nothing very pensionsy in there at the moment. There's rumours about Financial Services Act or something. But so King's Speech will be in mid to end of May, after the local elections and things, and there's kind of a reset. So this bill has to end at some point. And the two battlegrounds we've now got stuck with is that reserve power, the mandation, so-called mandation, still not a word, but we'll use it, the mandation. And that's gone back and forth between the ping-pong between Parliament and between the House of Lords and House of Commons. So where we are now is the House of Commons and Torsten Bell have tried to make it more like the Mansion House Accord, but the Lords are still just saying, no, get rid of it. So I understand there's another further tweak that might be made, I think, to restrict the timescale where it can be used. But I would wholly imagine the Lords just to keep kicking it out because they don't like it. And I think the Lords are probably feeling quite powerful to do so, because the industry is broadly on the Lords' side in not liking that reserve power. So I think they feel buoyed by that, and they will continue to kick it out. The other area where there's negotiation is around on the scale test. So schemes have to be have 25 billion assets in a default fund by 2035. But obviously there's lots of providers that are less than that who might get there one day, maybe later than 2035, or new entrants into the market might have an innovative way of doing things. They'll struggle to get to that size quickly, which you'll need to demonstrate. So I think that, again, the Lords would like to see a little bit more in there to allow new entrants to the market, but also for some established providers to remain and not have to be forced to consolidate and move around. And there's been lots of discussions around who might move where. So definitely more to come on that. The ping-pong continues.
Okay, thanks everyone for listening or watching. Hopefully by the time you see me next, the pensions bill will have pushed forward at least. Goodbye.